The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 18th day of April. My pleasure to be here. Quite an important week this in many ways because we're starting to see some bumping and grinding and some false moves to the upside and a couple of false moves possibly to the downside. We won't know one of them if it's false or not. That's IBM, at least for another few days. But let's go through this really carefully today. I know it's Wednesday, it's not Friday, it's not Chapman Wave study session, but I really think it's important. I've had quite a few questions as to intermediate term. What am I thinking? Are there, is it possible that the 9th of February, I always have to think of the, I grew up with the dates different to the United States, even though I've been here a long time, but it used to be the day, the month, the year. Then I had to learn that it was the month, the day, and the year. So it's 2-9. So the 9th of February, that particular low. Whether that was the low, and then we had the residual. I've been talking about this for a long time, the residual low, one of the reasons why we've been trying to get long for the bounce and succeed in some cases, didn't succeed in others, is because if that was a residual low and we've got the earthquake and the aftershock and we're done, then we should have a pretty decent rally going all the way into the summer. My thinking here is that based on the chart formations I'm looking at, based on weekly charts mostly, is that within the context of where we were and where we are right now, some of the leadership is being kind of roughhoused. That is, the financials, the XLF, should really be much, much higher. We should be leading by seeing Goldman Sachs just soaring after good earnings, etc. Not really happening. And a couple of things are going on. The semiconductors have got slammed. I've been talking about this for a while. I certainly can't call it inside information, but from my study of the semiconductors, it looked like they needed quite a lot more testing of downside support levels based on the chart formations that I'm looking at. Here we go. So the Dow right now is up 7 at 24,792. So I just wanted to clear that up. S&P is up 8, and there's obviously a much stronger S&P based on the fact that IBM is dragging the Dow lower. So I just wanted to show you that. Now let's go one at a time. You see this E-mini here? We've got to a peak E in the 120-minute chart. There's been a spectacular move from the low that was made in the 2640s all the way to today's high of 2718. At this particular point, I would have expected on the Wednesday after really two very good sessions that there's some kind of a consolidation. Actually, it is a consolidation only in relation to the fact that for the last couple of days, when we've been on any day that there's not been bad news, the market has been up triple digits. So in that context, yes, we're having a bit of a pullback. But if you look at the weekly chart, that lowercase h possibly going to a lowercase m is still in place. There is a downtrend line that comes in roundabout, depends when it is, which week. Let's call it 27.28 for now. We're at 27.15, up 9, another strong leg. I'm not calling this a gray leg B because the stochastics at 92%. That's very strong. The MACD is very good. I've even got a potential for a Chapman wave squash, one of the patterns we look at between the MACD and the stochastic. This is very good action. So if you're looking at this high of 2807.25 that was made mid-March, down to the 2552 level, yeah, 30-something, almost 50 points. Yeah, 50 points. That's a big deal, 500 Dow points. But this rebound is 50% so far. And that's really very nice. Look at the way It was reluctant to come down. It held the 9-period moving average way above the pink, that's the black line. The 200-period orange is exponential moving average, was fantastic trampoline support to spring it back up. The MACD is strong, not as strong as it was earlier, but it is good. And the stochastic is really good, and on-balance volume is running strongly. So on the daily basis, I'm looking at this and saying, what on earth could get it back to the 2532 level? That's like 2,000 points in the Dow. I'm not sure what's going to do it. And I'm looking at the weekly technicals, and they say, yeah, we've rallied okay. Still not very, very strong technicals. And the weekly chart is always the last to move up. All right, so before we run out of time, let me run the numbers, and I'll show you exactly what I'm looking at. Let's get rid of this. So peak E, the long-legged doji, if at any point for the rest of the day into tomorrow, we take out 2703.75, close 2 out of 3, 120-minute bars lower. I think we're going to go down even a little more, and then maybe Friday, options expiration Friday, we have a strong bounce. Okay, here we go. The Dow, INDU, Dow is up 10 points, not as strong as the E-mini, S&P E-mini, but MACD and stochastic are very good, 90% stochastic, MACD is good. I still say this is not the kind of a price appreciation. I would have expected something closer to what we saw at the 23,360 low, running into the 2,500s. So we've kind of stalled here under 2,500, but still good action. Even today, you've come back strongly considering IBM. So my bias right now is to say we have not fulfilled the upside potential, and I'm suspecting that by the end of the day, I'm going to put an up arrow and say that there should be a C and a D, probably underneath 25,449, the high that was made mid-March. Okay, that is the Dow, and the very strong support right now is at 24,730 to 24,680s. S&P. Now I'm just going to run the numbers. The S&P, you can see strong monthly still. Weekly is nice rebound. Didn't even test the 9th of February low. So this is very good action. And this is a much stronger leg B. And I've already got this as a blue B because of the 91% in the stochastic, and the MACD is very strong. So I'm suspecting there's still more to go. QQQ. This is the NDX 100. Nice action here, up 65 cents. We got stopped out of our long, the 300% short position, put in about an hour off the exact high, within 1 point of the all-time QQQ's high. And we did take some profits on the way down, really good profits. And even here was a very nice 14% profit on the remaining position. And then the turnaround from the 4th of February, sorry, the 4th, that should be the 4th of this. That's the 2nd of April. I wrote that backwards. Yep, the 2nd of April at 153.88. We're now at 166. That's 13 points higher. That's very good action, about 8% higher. So yes, this is leg C, and I've got an up arrow already because I think this is very good action. So now let's go to the IWM, and then we're going to come back to gold and dollar. We'll talk about that. There's very interesting things are happening there. Now what we've got is IWM is up 1 and 1.7. Nice action, actually much better than the other indices. That monthly chart is actually looking quite impressive. I'll be back Russell 2000.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from EverBank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it, so call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. EverBank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the IWM, the Russell 2000, if you look, it's got a Chapman Wave left side, right side price. Time actually just hit that exactly today, and that was the resistance right here on the 21st of 158.26. Today's high is 158.16. Needs another 10 cents, but it's very close. And then there should be a pullback, and maybe by the 27th of April, we should be trying to test the most recent, very important high of 160.30. All-time high is 160.62. So when I over the evening, I wanted to spend more time just going through this intermediate term outlook. And if the Russell is leading, it's kind of usually does that in January and kind of didn't do it this year. In January, in fact, it was very weak. If, in fact, it's playing catch up to its normality, and what it's doing now is leading the pack, then it's saying that the rotation is going to be very important that we look at. For instance, if I go to the XLF, which is up just a little bit. Oh, now it's down. It was up 5 cents. Now it's down 2 cents. This is, in a sense, an important factor for me because I want to see the financials doing well. And yet there's a breakdown that is very important because within the financials, if you look at the banks, if you look at the financial sector as a performance of the record that has been up until now, which is really the measurement of, say, what is MS? Morgan Stanley. If you're looking at stocks like that, Goldman Sachs, how's Morgan Stanley comes out with good earnings, it's up 8 cents, big deal. So up until last month, they were doing really well, and that was reflected in the market itself, which is always a little bit of a delay because the S&P and the Dow made their highs in January the 26th. So, but if you look at SCHW, Schwab, that made its high in March. That was March the 13th at 58.11. Pulls back to under 50, and now it's trading at 52.41. If you look at individual stocks like IBKR, never remember what it's called, Interactive Brokers Group, that made a new all-time high today. It's pulled back some. So there is a mixed message that's, if you look at Berkshire Hathaway, which is part of the financials, for goodness sake, but anyway, it is. BRK.B, look at this. Made its high in March, mid-March. It's pulling back quite sharply here. Whoops, no, that was the last high. The other high was back in February, the week of the 2nd, goes to 270.62. Now it's in a chop, chop, chop sideways move, not showing strength at all. So I couldn't help but say to myself, there is a sideways trading pattern. To break to the February lows, it doesn't have to be the exact low of the 9th, but the lows of February, there's going to have to be a reciprocal move up in the VIX index, commensurate with bad news. What it can be, who knows these days, right? But the VIX is trading at 15.79, back in its low, the low part of its range, just a tad above the 200-period exponential moving average in the daily, and the 200-period moving average in the weekly, and the 9-period moving average in the monthly. So this is a pretty critical week for me, because as I look at it, I'm trying to put the whole package together. And if you look at the XLK, when we get to gold and silver, they're all very, very important. Very nice rally. Quite a bit still off the highs that were made at 71.34 back on the 13th of March, has gone down to 63. So that's 8 points. That's 11%. Rallying nicely here. But the weekly chart is very weak. The monthly chart seems to be good. So the sandwich of the middle the middle chart, which is the weekly, can always be very delayed before it acts well again. So it's going to take pretty much all-time highs before the weekly charts improve enough. So I'm having a little difficulty right now calculating whether or not, remember we had a call last week about this time, maybe it was a little earlier, maybe it was Tuesday, and the caller asked, what should I do in the intermediate term about the Dow? Should I be buying the Dow? And I said, right as we're speaking at this particular point, I would start a position, because we're looking out, and I'm saying I believe this year we're going to see higher highs, all-time highs, that is. So you might have to be thinking that, okay, it's a shorter-term position. I'm going to give it a much wider parameter, but at least I'm getting my foot in the door, because I want to see how it's going to hold, how the Dow holds under all different circumstances going into April through to the beginning, maybe the first 2 weeks of May. So I haven't yet answered the question. I'm going to do that very shortly. Let's go to gold, and I'll tell you why I'm stalling just a little bit. Gold is up 4 at 1354. You see this range has got into the Chapman wave inside track repellent zone. It got above it, but it couldn't hold it. But the fact that it keeps wanting to go above it, it's like the 13, this high that was made on the 27th of 1362.6. It's like that's a magnet. And if it breaks that, immediately you can start looking at the 1370s as a leg D to come. It's holding very well. I did some work last night on silver. I didn't have a position this morning going, oh my God, how dumb is that? I did all that work, even spoke about silver, even put it in one of my bullet points in my Trader's Corner. What did I say? GDX, 23.06, is that today? Yep, 18. Right here, it says GDX 23.06, this is number 6A. Peak D and held 200-period exponential moving average support at 2260s. SLV, silver, is improving, waiting for a dip to possibly start a small long position. Ho, 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 long position. Look at that candle, up 2.64 at 17.23. It is broken out. Now, what do we say? Why is gold not following silver? After all, for all this time I've been saying, until gold really acts well with silver basically leading, I don't think gold is going to maintain a rally. Wait a minute. This is the most beautiful move in silver. Up 43 cents at 17.22. And I've been saying at 17.20s, this is very different. This is very different. So something's going on. Silver's acting very, very well. So I'm beginning to like this. The reason why I said that is I did a lot of work on the SLV last night, didn't actually put the notations in. I was just studying the chart in relation to the monthly, that downtrend line. Look, first time we've broken that downtrend line in a long time, and the weekly chart has improved in a cup formation. So this is very good action in silver. Now I can put in an up arrow, an immediate A, peak B, peak C, and yeah, we've got a gap up in Lake D, and it's not on a Friday, it's on a Wednesday. And the MACD is strong. The stochastic is still lagging at 72%. My thinking is there'll be some kind of a pullback towards the 16, maybe 1580s at some point, and that's where you'll see, are we going to see the stochastic get to the 80% level, which I think is what needed to be able to sustain the move in a very consistent move up where all the lows are bought and you go to higher highs. So that's gold, that's silver. As we go out, I'll say that the dollar right now is up 0.08. It's holding quite nicely, actually. What a mixed market. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So going back to silver, if this is a short squeeze just on silver alone, I could understand it if gold is not going to move commensurate. So this is a very important period. The reason why I've said this is such an important week, because we've seen waiting for the bank earnings. Bank earnings come out starting Friday. So far, ho-hum, nothing to see here, folks. Then you get the volatility within the commodities, where you've got one that's always the laggard starting to lead, I have to see follow. Now I'm saying gold needs to follow through to the upside. I don't like to see one move without the other. I like to see them move in pairs, just because that's kind of traditional. They don't have to, but that's what I personally would like to see. The other thing is, if you're looking at the euro, the euro isn't moving up much. It's just up at 1.238, 0.001. It's in the trading range, walking in the 9-period moving average, the weekly chart holding very nicely within that circle, that oval pattern that I've spoken about. USD, JPY, here's the dollar holding okay, not great. And this has gone to a peak C and just kind of also walking in the 9-period moving average. Funnily enough, they're kind of moving in concert, which they don't usually do. So currency-wise, there's something going on here that is also a little bit different. Now, this is going to be very important, because if I look at it in terms of the crude oil spikes to the upside 1.23 at 67.75. In leg C, now it's got a new, it's in a buy mode. It should go to a D. It's above the weekly chart, 200-period moving average. Why isn't the dollar pulling back really sharply? That usually happens when crude oil over the last phase, about a year or so, about a little more than a year ago, this is what we see very often. So here we are looking at individual charts that are non-relational. In other words, the mirror image that we'd sometimes see isn't working here. You're getting parallel movement. The stocks that are really important that would in fact impact the market. Look, all of a sudden LRCX, one of the most, Lam Research, one of the great semiconductor stocks, 201.66, down 10, down 5% today, made a peak D in the daily. It looks like probably a leg D a peak D in the weekly, and a leg F/C. We'll see what it's going to be. But the MACD is okay in the monthly. The technicals are very weak in the monthly chart on the S&P, on the stochastic. So here I am looking at this, I'm saying, wait a minute, we are still long, for my opening call subscribers, long the semiconductors. It's down only 70 cents here at 105.29. So very nicely, considering that a leader and Applied Material, the two leading stocks, Applied Material and Lam Research, AMAT gaps down. It's at 280, down 280 right now, 55.07, down almost 5%. What an interesting market this is. If the SMIs, because Intel was strong yesterday when the others were a little bit weak, INTC, yep, it's up 69 cents today, and leg C breaking out all-time high. So if you get an Intel within the sector, you get some stocks. Hey, wait. Well, can't remember. Is NVIDIA part? Yep, NVIDIA is part of the group. NVIDIA is up $1.49 at 239.03. Leg C in the daily chart, improving. Technicals not great, but improving. Weekly chart, a nice bounce there. Monthly chart still G/C. So individual stocks are doing the work here. So had a question about GE, IBM, MMM, and UTX, my Dow quartet. GE is at 13.72. It's attempting to have a bit of an upside breakout before the earnings report on Friday. And I suspect the CEO is going to throw everything that he can to get rid of whatever is possible to start more of a clean plate with GE than certainly what he's had. Look at that monthly chart. That's just pathetic. It's trying to form some kind of a base here. So GE, IBM, down 12 at 148, went to a peak D. Remember how potent these peak Ds can be? And the plunges from yesterday's high, just about 162 because the other one was the peak D at 162.11, missed that high by 11 cents. Plunges down at 148. What a big move in one day. Now, what's really important is MMM was just lackluster. All of a sudden, it's had a bit of a bounce, but it's only a bit of a bounce. And my Dow quartet is saying UTX can't even make it out of the box there. So I'm looking at this and I'm saying, in some ways, I don't think the job is done to have the consolidation complete. Doesn't mean we have to go back and test the 23,300s. On the Dow, it doesn't say you have to, not if you're getting a rotational aspect, because Boeing is up 4.85 at 341.57. A nice move, but not a great move. I do think that that Boeing's going to have a problem, and it's going to stall very soon. But hey, wait a minute. The PPA, which is the Power Shares Aerospace and Defense ETF, breaking out, almost testing the all-time high that was made right here of 58.97 back on the 27th of February. 58.27, we've just gone above that. We went to 58.99 in leg B, and I believe this is a breakout. So far, I'm going to call it a breakout. The MACD is very strong. Stochastic is at 90.40%. This is a leg E in the weekly chart, the cup formation breakout. I can't really do anything other than say, yep, maybe this is Raytheon. That's just, oh, look at that. Raytheon down 32 cents. Made a new all-time high today, 228.52, trading at 226.79 leg C. Yeah, I think there's going to be a little more to the upside. In the PPH, Raytheon's acting very well. So next question I had was HG. Can I look at HG? Oh, I forgot about that. HG goes to leg E. Nice move. Now look at this. Remember this trend line I drew here? And I said, isn't that interesting the way copper cannot break the weekly chart resistance? Now look at this. It's the same thing, except you're getting much, much wider moves. And it still has this resistance right here at 3.19. It's trading at 3.15. If copper on a weekly basis by next week is able to close about 3.20, let's give it a little room. Let's say 3.21. That would be very impressive. That would be very impressive. All right, leg E in the weekly chart. Yeah, I think I've got to a whole bunch of the questions. The S&P 60-day cycle, April rallies like we saw in February. Okay, let me get to that in a moment. There are things that I need to just cover that I haven't. I'm going to go to this right here. This is my triple yield chart. And if you're looking at this at 30.21, 3.02 for the 30-year in the middle of the lower part of the range, 2.849 for the 10-year in the middle of its recent range in the weekly chart, 2.72% for the 5-year, almost at the previous high. Look at the cluster formation of yields. This, to me, is one of the most important things, and that's another reason why, at this particular point, I'm hesitant to say that we aren't going to have some kind of a move to the downside that goes into the February area. That's what I'm saying, February area, that the real breakout isn't yet ready. Might be wrong. Dow's down 30, I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
How about we're back? So I had a question. Let me just show this chart for 1 second here, and then I have to move on because it's a really good question. The wood, which is the iShares Global and Timber Forestry ETF, made a new high. Right now, it's up 65 cents at 82.80. This is international timber and forestry. So what a mixed picture. Look at the HGX, the Philadelphia Housing Index. Yeah, it's up today. It's up 55 cents at 323.11. But it's stuck in this rectangle range at the bottom. It is not coming back very sharply at all. It's 323, all-time high is 369.15 back in the week of the January 26th. Then I just wanted to finish this up here. So this cluster formation is something that I'll talk about tomorrow, but I think that yields are going to become a problem in a little while. There's going to be a recognition, and it's going to impact certain areas. So with that said, let me just go back to the question I had. Steve wanted to know, what is the wave count in the XAU? Now, this is fascinating because there was a cup formation in the XAU. This is the gold. It's called the Philadelphia Gold and Silver Sector Index. It made a high at a peak F. Whoops, I forgot to put that in, peak F, right there back in January. I think it was almost the same time as the general market. Yep, it was. So that was right there, January the 24th. 26 was the S&P and Dow all-time high. And then it plunges from the 93s, 92s, down to the 77s, and is now rallying in a cup formation above the previous high that was made on the 14th of February. That's like a single leg 8 was a B, pulls back, made a lower high, and now it's rallying, and it's just gone to, there's a potential for a Chapman wave instant restart. At this point, I'm calling it a leg F. I need to do a little more work on it tonight to see whether or not the technicals based on 120-minute, just don't have time now, suggest that this is more likely a new B than an F. But the technicals are very good. That's the reason why the gap up, even though it's a leg F, should hold very nicely between 84 and 83s. That's a very strong support area. New leg C up in the weekly chart. Now, remember my expression is within the context of the rectangle formation. And I always talk about this rectangle formation. My expression is, doesn't matter whether you're trading a 2-minute chart in the futures or you're trading a monthly chart in gold, as we saw once before. Doesn't matter what it is. A rectangle formation can last a lot longer than your patience. And what you need to see is a decisive break of the resistance line or the support line. But within that, I like to have a much narrower one to the candlestick highs, that's the wick highs, of importance. The most and the most on the downside, the lows. And then if you break, you can start adding, you can go back to the extraneous event that took it beyond that before. Meantime, that means that you've got in the XAU 92.94, still a lot higher than the 85.62 it's at right now, a strong resistance, and you've got the support way down at 75 in the 75s, and here it is 10 points higher. So it's kind of right in the middle of the range, and this range can go a little higher and a little lower. But what's really important is that if the weekly chart, this Grand Canyon cliff on the downside that was made from the February high, from the January high, if we're climbing that, the moment the XAU goes to 86.90s, then that magnet of the 200-period exponential moving average starts to drag it and pull it towards it at 87.70. So this is a very important period. And look at this. If you, I don't want to get too carried away with different things. If you look at the dollar, it's in the same kind of rectangle formation, but on the downside. And the 89 level is key support, and the 90.60 is that? Yeah, 90.60 is the high, and it's just stuck in the middle here. All right, I want to go back to see if I can do it for a moment. HUI. Oh, I haven't. So this is AB, and then it recycles A, B, C, D. So yeah, so you've got the same thing with the HUI, which is the this is called the ARCA Gold Bugs Index, and it is at 185.28. If it takes out today's high of 186.39, that 187.72 200-period moving average in the daily chart becomes a magnet. If it pulls back sharper, 181.35 is the 9-period moving average support. That's really strong at this particular time. So now I needed to do something, a quick question. Oh, IYT I've not done. The IYT, oh, nice move up, 3.9 at 194.32. This is a really strong leg B. No, yeah, it's a gray B because it's under the previous peak C. Am I going to get an overlapping wave? So this is A to B. And the weekly chart has all of a sudden improved. It wasn't looking very good. It had the H pattern. See, here's another reason why I keep saying very mixed market, because the transports were failing. They were not giving a confirmation of the rally when they started to break down. And in the last week, it's just a week, look, 1, 2, 3, 4, 5, 6 trading days, 5 trading days really. It's just taken a leap to the upside. And one of the reasons is you've got CSX, oh my, look at this move. A gap up to a leg D in the daily, a leg A, B, leg C in the weekly, a leg E in the monthly, and Sarah wants to know JBHT, that was yesterday's big winner. Look at that, huge move up, and it is in that resistance, Chapman wave, inside track resistance zone. Let me just put that in there. It is. So now what you've got, oh, it just snuck above it, but it hasn't broken above it. Excellent move up in JBHT. What was the other one that she said? Oh, UNP. Oh, is that what I just did? Yeah, UNP. Oh, did I do UNP? Oh, UNP is in leg A, B, C, D in the weekly chart under the previous high of peak D in the monthly and the weekly, and in the daily it's gone to a D. This could even be an E. Very good action. The rails and the truckers are helping those airlines. And here we go. Look at that. There's that resistance trend line. So this is a very interesting pattern you've got. This is the megaphone pattern. I like that. So, boy, I mean, I think let's see how we have I think this is a digestive day. That's what I was expecting today. I'm anticipating there should be another shorter-term burst of energy. That's going to be the big test all the way around, as far as I'm concerned. We've got individual stocks that are working well. We still got our short on the home builder. It's just struggling here. It's up 25 cents, still acting very poorly. And as I say, we're still long the semiconductor index. That is, hey, how did it survive like this? I guess Intel has a greater weighting. Okay, so I've covered those questions. Any calls? No calls. So that gives me an opportunity, just before we go to the break, this is what I want you to do. I want to just get out of this, the long-term chart, just so that I'm making sure that I don't close the workspace. I wanted to show something very interesting. Here we go. Come on, come on, come on. Yeah. Okay. Within the context of the different sectors, the IBB, I want you to talk about laggards that are trying to work. They are working, but not great. And I'll talk about that at the beginning.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, you got Steve, you've got Dave, you've got Tom, you've got Wednesday today, you've got Tom O'Brien wrapping up today. So this should be a fabulous day to listen to TFNN. He'll be looking at, I just want to go to the questions. My statement was going to be that sometimes when markets start to get very choppy, then fund managers tend to go into what's held well and was a winner, and they think it could come back as a winner, and that led to the IBB, and it's moving up, but it's really struggling. I don't think it's a very big move right now, percentage-wise. Off the bottom it is, but not from where it's been. So the biotech, NASDAQ biotechs, that's an area that has worked sort of right now. It's not all that strong. Question I had was, Basil, sorry this is later in the show, but curious, what count do you have on the TVIX? Thanks as always, Rob. Rob, it made a peak E at 12.06. This is the volatility index. The VS 2 times volatility shares is down at 707. It's making an invert, what I call the uppercase A, the Eiffel Tower, straight up, straight down. And now it's getting close to a point where it might want to bounce a little bit. I don't see it bouncing. Maybe next week it starts to bounce. That's the way I'm looking at the VIX index. That was that question. The next question was, if I can go to it right here, can I find it? Yep, there it is. What about GBTB? So that is the fund for the Bitcoin. Here I've got Bitcoin itself. It's just really, there's the arch formation. It's trying to form a base here. It's making tiny little arches at 8,132. Unless it can get to 9,475, somewhere around there. This is just another bounce attempt. It's just not showing tremendous strength. But look at this chart right here, GBTC. GBTC really tells the story in much greater detail because this is trading only during the market hours. So it's a different kind of animal because it's a fund that overnight anything can happen in Bitcoin, but this one trades just during market hours, and it's just kind of stuck here. Yes, it made that Eiffel Tower, same sort of thing in the peak D, doji gap up top, plunges from the 20s and comes down to the 10s, and now it's trading at 12.91. Until it gets to 14.35, I don't see very much at all. I think it's getting close to some kind of a bounce, but I could only call it a bounce at this time. Basil Chapman, Tiger Editions are wrapping up. Check out my opening call. I hope you find it very, very informative and also very lucrative. I'll be back tomorrow. Have a great day. Stay tuned for Steve. Dave.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.